the Swiss Central Bank, SNB, suddenly decided to reduce interest rates. The SNB's actions could lead to further monetary policy easing moves from other central banks. Switzerland has reduced its operating interest rate by 25 basis points to 1.5%. This move is contrary to economic experts' forecasts of keeping interest rates unchanged. Swiss inflation continued to decline in February and stood at 1.2%. In the past few months, inflation has returned below 2% and is within the control range of the SNB. According to new forecasts, inflation can remain at this stable level in the next few years, the SNB emphasized. The SNB also lowered its inflation forecast to 1.4% in 2024 and 1.2% in 2025. By the end of 2023, Switzerland forecasts 1.9% and 1.6%, respectively. After the above move, analysts at economic research company Capital Economics expect that the SNB will reduce 2 more times this year and inflation may also be below forecasts. The SNB's actions could lead to further monetary policy easing moves from other central banks. Experts say the SNB does not want to wait for another central bank to act first. The SNB only holds 4 monetary policy meetings annually, half the number of the U.S. Federal Reserve, Fed, and the European Central Bank, ECB. Therefore, they will have to wait until June, after the Fed and ECB act, to decide on monetary policy. Switzerland is the first developed country to lower interest rates after a long period of high inflation pressure due to the impact of the COVID-19 epidemic and the Russia-Ukraine conflict. Switzerland will also be affected by the banking crisis in 2023 when the government must facilitate UBS's acquisition of Credit Suisse. Previously, the Central Bank of Norway kept interest rates unchanged at 4.5%. The Fed also kept interest rates at 5.25 to 5.5% and forecasts 3 interest rate cuts in 2024.